Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, everybody, welcome back. Hello. Got a bunch of people already tuned into the stream here this morning. You guys are out here and ready, so it's good to have you back. We're going to be discussing all of our usual candidates. We're going to take a look at indices. We'll look at commodities like gold, talk a little bit about the big drip in copper and silver, and oh my goodness, oil down 3.4%. What's going on? I'm going to do my best here as we kick off the show to keep you guys informed as much as possible. If you guys could do me a big favor as we start the live stream today, hit the thumbs up button, subscribe, all that good YouTube stuff. Let's get into it. So, oil's down 3.5% here this morning. And here's the culprit, I would argue. It's the Chinese stock market actually coming down pretty hard this morning. At one point, guys, we were down when I woke up this morning around 12%, which is real crazy to see in just a single day on a stock market exchange. That is very wild. That being said, when you look at these Chinese stock ETFs, or when you're looking at the Chinese stock market in general, you're talking about something that has just gone straight up and to the right for a few weeks now. It's going to happen that you're going to get some pullbacks, that you're going to get some sell-offs. That being said, why did you get such a harsh rejection here? From peak to trough, guys, we're looking at a move here down like 14%. That's crazy. If the U.S. stock market was down 14% in a day, people would be going crazy, right? So why is the stock market for China down so much? Well, it's because we've had a little bit of a little disappointment on the stimulus front. Now, in the first place, why stocks for China went up so much aggressively was because it does still seem like the Chinese government and central bank are injecting stimulus, reducing regulation to start to help out the economy and the stock market itself, right? So today, the theme here was a little less excited about that. There was something, I don't actually know exactly what happened, but I just know that expectations for stimulus were obstructed a little bit here and caused a bit of a correction on the Chinese stock market. That being said, guys, let's put this into context. The Chinese stock market at this point is still up like 29% in the last few weeks. So, it's a sell-off, but only really an incredibly painful one if you were long after the big move. And this is 101, whether you trade the Chinese stock market or not, right? It's irrelevant. This is just why you have to be careful chasing stuff that's going straight up. Another example of a company that I think you have to be careful chasing is NVIDIA, as I am currently long. So, Nick, were you chasing? Well, it depends how you ask, because if you were looking over here, I bought higher than this entire area, but I waited so patiently to get into NVIDIA, and I may still be able to get shares at a cheaper price, by the way, if price does come down. That being said, NVIDIA was on just a tear to the upside, and some of you may have been watching the stream when we discussed NVIDIA during this time. And, I cautiously mentioned that I can't buy NVIDIA when it's just screaming up. I've got to wait for investors to get less excited about it. And as a trader or an investor, it's important to recognize the environment that you're in. So do you think the Chinese market is overvalued? That's a great question. I think that the Chinese market is relatively fairly valued on a historical PE ratio basis, but there are inherent risks with the Chinese stock market that make it so that I only would really be interested in buying it when it was down here, right? I know hindsight 2020, should have bought it over here. But what I mean by that is that on a price to earnings basis, the companies of China, they have a lot of potential strength, growth, etc. The issue is that the Chinese central bank and the Chinese government are something that uh, us Westerners get a little scared about, right? Because we don't have it. There's not as much transparency. The capitalist spirit is not as clear and evident as it is in places like the United States, Singapore, Japan. There's more of a capitalist energy that I think, you take a look at the U.S. stock market. It's evidence of what a strong, innovative capitalist society can generate. So, when you look at China, there is some great growth there. They're a huge economy. It's a stock market I'd like to have some exposure to, but I don't, and I'm definitely not chasing it. If we see it crater back down, I'll probably look for some opportunities, but not going to chase it at this time. I'm long the Nasdaq currently. I also have some sector ETFs that I'm trading. I'm long things like real estate, actually. I picked up a real estate position yesterday in XLRE. This is an ETF that tracks the real estate sector. Reached a bit of an oversold status here on my technical chart, but also there's a little behind the scenes secret stuff that I liked. I'm using a very, very well kept secret software tool that we're working on at A1 Trading, specifically for stocks, sectors, ETFs, and options. I'll talk to you guys about that in just a second. Let's keep going for a moment. Let's do a little bit more of a full look around the room here. Taking a look at gold here on the 4-hour chart. We mentioned yesterday, looking for a possible break of this 4-hour structure. Resistance still holding strong, but at the same time, bulls are holding their own at support. What I'm looking for possible sell setups on gold would be a trend reversal. And if we take a look at the Edge Finder here for just a second, let me make sure, go to Edge Finder. Gold is getting a -4 to -5 range. Yesterday it was at -5. Today it's at -4. But you know what's going to make gold really change into a bear territory like decisively on the Edge Finder? I'll show you what it is. It would be if the daily chart starts to trend lower and we start to see gold go from -5 into like the -7, -8 territory on the Edge Finder's output scores because of trend, right? Trend right now is still holding on to a positive daily chart trend. If that daily chart trend cracks to the downside, gold's going to start looking like a really potentially good bearish setup for me. And again, I recognize that you're fighting something. Oh, accidentally leaked the secret. We'll come back to that in just a second. If we're looking at this thing and it starts to break support, then I very well may actually start to look for sell setups on gold. We also saw silver down here this morning, oil down this morning. Why would these things be down? Well, we just discussed China's stock market is down 10%. That is a big hit to commodities because the Chinese economy is a manufacturing economy. A manufacturing economy demands what? Materials, basic materials, oil, silver, copper, iron ore, human labor. Not even joking. Like, that's actually true, right? Big growing demand creates demand for more people involved. So anyways, the Chinese stock market taking a hit hurts that story a little bit for some of the more basic commodities like oil, etc. That being said, oil is still on a rocket ship to the upside here recently, and if it pulls back, I am actually interested. I still think that you may get a nice continuation opportunity, especially if the U.S. economy with all that good labor data. I like oil longs if we can get the setup. I do believe we also have on the Edge Finder, we've got some setups for oil. Let's go take a look. We're pretty close. So as long as that daily uptrend stays intact, oil looking decent, right? You've got a +4 score here. It's very close to a +5. If you get that technical pullback into a level of support, I very well may look for some oil longs. So there's a lot of stuff setting up here today, and we've got just about 400 people here, and I'm going to do something kind of exciting. Here, some of you guys are spoiling the secret. You guys are spoiling the secret, okay? Got something fun for you guys. We've got something in the works here at A1, and I'm going to play some music here. because I'm going to show the secret. The secret's out. This is just a screenshot that I took this morning of something that we are working on here at A1. Is anybody here a stock trader, an options trader, an ETFs trader? If you are, and you've been patient waiting on A1 trading to get started on something that is a stock market equivalent to the Edge Finder, today is something so exciting for us here at A1. We've been working on this for a long, long time. We've got something in the works here, and it's not ready. It's still being functioned or worked on. But I'm going to go into a little sneak preview here, and I'm going to show you guys some cool stuff. So what you're looking at is just a screenshot. If you're an ETF trader, if you're an options trader, if you're a stock trader, I got something so exciting to show you. This is our new 13F scanner. Now, just like the commitment of traders data is a way to track institutional money, if you're a stock trader, the 13Fs is your equivalent. With the 13Fs, we can select, it's hard to see on this picture, but I've selected Warren Buffett's portfolio in the screener. You heard that correctly. I've selected and filtered for Warren Buffett's stock portfolio. His holdings are all on the screen right now. This is a software tool that is almost ready. It is coming to market soon. We've been working on this for a year, countless hours. You guys know the drill. We're a software company, and we try not to miss with this stuff. If you're a stocks and ETFs or options trader, this tool is coming soon. And if you would like to get access to it early on, we just dropped a link here in the chat. So this is not, again, it's not ready yet, but we're going to be keeping up to date with stock data. We've got financials. We've got studying what institutional money is buying and selling in the stock market world. The stock market is an amazing tool over the long term to generate massive wealth. It's how super wealthy billionaires make bajillions of dollars each year. They invest in quality businesses, they hold them, or they trade them. You know, the big money traders also are out here, and we can now track them using our software. If you want to track millionaires and billionaires and hedge funds and all other sorts of giant, rich people stuff, this is fun. The 13F scanner is on its way. We have way more tools than this. This is scratching the surface for what is to come shortly. If you'd like some early information about this, I'm going to ask you guys to join this link right here. Only if you're a stocks person, because listen, if you're not a stocks person, don't join the link. Like if you're not interested in stocks and options and ETFs, don't join the Telegram. But if you want to join the Telegram, we are going to be doing free analysis for stocks in there, but we're also going to be sharing some sneak previews to this new tool that we've been working on. So let me just give you a little bit of high level what this tool is going to do. We've got all the different holdings of Berkshire Hathaway on the right-hand side in a pie chart for you to take a look at. We also have quarter to quarter the change in shares long or short. So if they bought a bunch of Apple stock or sold a bunch of Apple stock, by the way, did you guys know that Warren Buffett actually sold a huge chunk of his Apple position? He also sold Bank of America. Actually, no, I'm sorry. He bought some Bank of America. You can see all of this in this new thing, and we're so thrilled to be bringing this to market. It's something we've worked on for years. Well, not years. We've worked on this tool for a year. We've been building software tools for years, and this is a super long-term project that Frank and I, him and I do a lot of the design work here at A1. We've been wanting to do this for a very long time, so we're thrilled to bring this. Continuing on, you can also see the top buys and top sells quarter over quarter by the selected fund. In this case, we're looking at Warren Buffett's Berkshire Hathaway, but you can, of course, select different funds and see what positions they bought and what they sold. So again, if you are interested in learning more about this tool before it comes to market, all early access information is going to be included in our free stocks Telegram. Okay? So yeah, we're really excited. That's all I've got here for you today. That is your teaser. Now back to your regular scheduled analysis. But yeah, yeah, I'm really excited to be bringing that uh, to the YouTube pretty soon. Anyways, oil's pulling back here. You've got NASDAQ also up 0.3% here this morning, just recovering a little bit of that lost ground yesterday. I had a big kind of sell-off here yesterday, bouncing back here a little bit this morning. We'll see if that can persist, if buyers can stay strong in this area. You know, the NASDAQ is still sitting at a level of support. The question is, can it really actually get some legs to get off that support? Because you got to think, guys, we had good NFP data, right? Strong NFP, and that held us here, but we didn't quite break through. You know, I was thinking that NFP might have the potential to do one of these guys, but we haven't seen that yet. So we're waiting for price action to confirm, are we strong enough here to actually start to break resistance, or is this consolidation going to fizzle out and, you know, go test lower prices? I do lean towards the bullish side when it comes to the NASDAQ. The Edge Finder is also giving us some nice confirmation on that side, on stocks in general. But by the way, Bitcoin's also a bullish setup here for us. I want to look at that. S&P 500, Dow Jones, Nikkei, the DAX. Why isn't the NASDAQ? NASDAQ's only a +3. Seasonality, not super positive in the month of October. But just so you know, guys, seasonality-wise, we are coming into an interesting portion of the year. It is only the 8th of October, so we're not quite there. But let me show you something, some valuable data here. Okay. We're going to select the S&P 500 here. And what I want to show you guys is the historical average return by month. Shows us going into a very strong historical portion of the year. What you're seeing here is the 10-year average performance by month of the S&P 500. So September, we got through September. That was a slightly expected negative month, except the stock market popped anyways. It's just been a real strong year for stocks. And then we go into October. October is expected to basically be flat. And then finally, November is expected to be a very positive month. And finally, December is expected to also be positive as well. That Santa Claus rally end of year effect. So in my opinion, this month is an opportunity to potentially find some good opportunities in the market and get ready for that fourth quarter rally if we get it. Now, again, there are some things that could sour the story here. Don't get me wrong. This historical average is just that. It is just an average. Things can change. The market can morph and you know, contort and do all sorts of things. You know, if there's some volatility in the Middle East, if there's some uncertainty with the election, if there's not a, you know, peaceful passive power or whatever happens on that front, that could be concerning. But more important than all that stuff that I just mentioned is company earnings. If corporate earnings come in strong, stock market, in my opinion, is a dip buy every time. If corporate earnings come in rough, then we probably have potential sustained downside. And that's why we're going to be watching that so close going into the next few months is corporate earnings are going to be very important if you're somebody who's watching the stock market like myself. I'd like to see stocks come in with strong earnings, you know, leading from the top line, talking about companies like NVIDIA. We want to see strong earnings for NVIDIA. By the way, NVIDIA killing it still. We want to see Apple, you know, come in strong. We want to see Amazon come in strong. You want to see these big names deliver the goods, if you will. And if they don't, you got to be careful out there, because then you could be staring down, you know, a potentially overvalued market. But again, just depends where we get with that. Let's take a quick look at gold here. Is gold due for a bigger pullback? Well, in my opinion, we've had a very good run this year. That does not qualify it to be, oh, well, we've had a good run, now it's going to come down. That's not enough of a reason. It is something to consider because we have had a very strong, solid year for gold. And we have some forces that work against gold now. We have pretty solid economic data coming in, which is a headwind for gold. We had NFP, services PMI, ADP, JOLTS jobs, unemployment claims. All were pretty good last week. This week we get some CPI and PPI numbers, which will be important as well. But right now, the economic data does not really support, in my view, a massive uptick in gold. That being said, the geopolitical situation in the Middle East is a tailwind for gold. So you have some conflicting forces. If either of these things change and we get both going in the same direction, let's say economic data starts to sour again, gold could make a rush to 2,700. But if the situation in the Middle East calms down in any capacity, then you have a double negative. Right now, I think you're kind of neutral. But if any of those stories change, which is why we do this every day, this is why we're on YouTube every day talking about this stuff, then you might have the double whammy effect of both down or both up. And I'll keep you guys updated on that if I see anything. The other thing I'd be looking for, just on a simple perspective, is price action. 4-hour chart, we're ranging. Can we break one way or the other to get a more decisive read on where price action may want to go next? So we'll see. Silver's kind of the same story. You're ranging here. You've got resistance overhead. You've got support down below. But with the Chinese stock market slipping hard, that is not particularly bullish for industrial metals like silver, copper, iron ore, etc. So if you get this break to the downside, that could be a nice move lower, in my opinion, on silver. But we'll have to see. Silver is getting a bearish read on the Edge Finder, I do believe. Let me see. Yep, silver and gold are both getting bearish readings on the Edge Finder. So I'm on alert. I'm watching for setups there. By the way, if you guys would like to get access to the Edge Finder, we're going to drop a link here in the chat to send a direct message to a member of our team. If you are interested in getting access to the Edge Finder for a stream discount, listen up. We're going to drop a link here in the chat. You can send a direct message to a member of our team. Ask any questions you have. If you want to pay with crypto, if you want to do a payment plan, whatever you want to do. If you want some information about the Edge Finder, the best way to do so is to speak with a real person on our team using that link. It's not a robot. It's not a chat AI or anything like that. It's a real person on our staff who can assist you if you have any questions. Let's look at Bitcoin, because Bitcoin is a setup on the Edge Finder right now, and I want to see where we're at with this. So I have some bullish positions currently on Bitcoin. I did actually, quote unquote, kind of buy this dip in a unique way. So what I mean by a unique way is I'm going to show you what I did here. I got on my other screen. Let me move it over here. So BITO is an ETF that tracks Bitcoin, but you can actually trade options on it. And I do like to trade options. So I actually, instead of just outright buying Bitcoin, what I chose to do was sold puts on this BITO ETF. And so what I've done is basically said, if price comes down here, I'll buy it, right? And the beautiful thing about options, think about this as this. I basically put out a buy limit, right? I put a buy limit out on this Bitcoin ETF. And if it never goes down there, I still get paid. And if that's confusing, options can be confusing at first, but bear with me. Options are not as complicated as they may seem. They're actually a very cool way to generate pretty consistent income if you know what you're doing and you have good risk management, etc. That being said, so what I've done is I've sold 10 contracts at a strike price of 15.5 puts. And in return, collecting like $600 something to do that. So if the market never comes down here by expiration date, I still get $600. If the market comes down here, I just have to buy the shares. That being said, if they come way down, I still got to buy the shares at this price. I'm just agreeing to buy it at this level. I'm basically, like I said, the cool thing about selling puts, it's basically like getting paid to put out a buy limit order in the market. It's a really, really awesome thing. That being said, there are risks with everything. Nothing in trading is easy. If you think trading is easy, then stick with it and you will learn to the contrary. I hope that you learn on a demo account that trading is not easy. Worst thing is a lot of times people learn that trading is really difficult with like their savings, which is incredibly painful. So don't let that be you. Trading is real hard. We know that. Taking a look at US 30. Yeah, let's look at US 30. So US 30 coming down here this morning. If it keeps going, I actually love that because I've been waiting for a chance to maybe get a little bit of a dip buy going on US 30 if we get down to like 41,500. Edgefinder's got a confirmation for us on that one. Dow Jones is getting a +8. I really like this high score on the Dow. So I am watching Dow Jones. I mentioned also Bitcoin. Copper, I am interested if we get a discount. Believe it or not, it's not something I trade very often, but I do like some of these commodities on discounts if we can get them. So we'll keep an eye on some of that. Dow Jones on a dip would be interesting. I actually bought a sector ETF. Do you guys want me to show you another screenshot? Should I show you another screenshot from the new stock market scanning software? I took a trade based off of it yesterday. Let me see if I can. I don't want to accidentally leak the tool too much, but let me show something really quick. Okay. So many of you guys, some of my stock trading and ETF trading friends are going to like this. Check this out. This is another feature. We're leaking a second feature here today on the new. I gotta be careful. On the new tool that we're working on, here is another leak. The top sectors and ETFs page. So if you're somebody like me, I trade these things a lot. I trade real estate ETFs, bank ETFs, financials, energy, utilities, industrials. I trade a lot of these things. This page, similar to what many of you guys are familiar with the Edge Finder, the top setups page on futures and Forex, this is a similar tool for the new stock product that we're working on, top sectors and ETFs. And you can see that the top setup currently is real estate. So when looking at the macro, similar thing, CPI, employment change, unemployment, interest rates, etc. We've got a positive score here of +7. So I leaked this earlier, but if you guys would like to keep up to date with the latest updates on this new stock product that we're working on, join the Telegram. It's free to join. Will it be free, Nick? No, unfortunately not. Just like the Edge Finder, these things are very cost heavy to build and maintain. And there's, we have a full support team that does this stuff. So our tools are not free because we're, there's a lot of costs associated to offering a tool like this. It is a passion project for us, but unfortunately, we're not just going to write the checks. It's a tool that we, we sell because it's great value, the Edge Finder, and we do plan on launching a new stock product pretty soon. So if you're an ETFs person, highly recommend follow along with the latest updates on this. We will keep you informed so that you can get early access and super discounts if you decide to get access to the new stock product when it does release shortly. But I'm so thrilled about it. I'm so excited because, I trade a lot of ETFs myself, and I have a methodology, but it takes us time to build out tools that can really, help to scan these things. And we've finally gotten to it. So yeah, I think that one I must get. Yep. Keep up to date. Like I said, join the free Telegram channel for stocks that we have. We do also have one, of course, for Forex and futures. If you're more of an FX and futures person, don't worry. We still do that too. But just very, very important to join that Telegram if you want all the inside scoop and mega discounts. What do you use to buy ETFs? If you want to trade ETFs, there's a couple. Well, it depends what country you're in. It may or may not be available to you, but we could drop the link for Webull if you'd like to check that one out. See if it's a possible brokerage that you could use. Webull's what I use. It's what I'm logged into. Like if I'm trading the real estate ETF XLRE, you can see I've got 1,000 shares. It's not a lot size. It's not like FX or CFDs. But yeah. Russell's a little bit here lower this morning. Dollar index is about flat. You got the VIX down 3%. I wouldn't mind if this VIX rolled over here a little bit, as I've got a lot of options that I've sold, and usually a falling VIX is good for options and a rising one. I'm sorry, a falling VIX is good for option sellers, bad for option buyers. How can I learn about trading stocks like you do? Absolutely. The best way, the easiest way is just join that Telegram. Some free knowledge, some free game. If you're trying to get more into stocks and ETFs, that link will help you out. NASDAQ's up about 0.4 here. How's the semiconductors ETF looking? This is another one from the stock product that we're working on. I bought this pullback here. Can you go over CPI? Bar, I'm not sure what you're looking for in terms of CPI. In terms of how CPI could impact us going into the rest of this week, you do have the consumer price index coming out on Thursday. If it's higher than expected, it's going to be most likely positive for the dollar. Let's take a look at some inflation data. So we're expecting inflation to keep coming down. If it keeps coming down, the dollar could see some bearish reaction. If it pops higher, that would mean Fed's going to probably cut rates slower, bullish for the dollar, bearish for gold. If you see inflation continue to cool, the Fed's likely to continue cutting rates, and that would be more bullish for gold, bearish for the dollar, and stocks would probably like falling inflation to continue. Got to say, Nick, I love how transparent and straightforward you are with us, even when you're pitching your products. Thank you very much for that. There is no deceit here. We do YouTube for multiple reasons. This is a topic that I'm incredibly passionate about and love doing. I love talking about financial markets, but this is a business, and we will never disguise it as something not to that. We're offering genuine value and experience here, but we do also sell things. We're a software company, so there's never a question of whether or not there's something for sale here. There is. You don't have to buy it, and there's free value to the streams every single day. But if you choose to, you can get access to some of the tools that we use to navigate the markets. And genuinely, I think there's tremendous value in them. Otherwise, I would not sell them. The Edge Finder is something, guys, I genuinely, hand on a Bible, would say I think it is worth every penny. It's a very, very good tool for scanning the financial markets. I would buy it over and over. You know why I would buy it over and over? Because we've invested a ton of money ourselves into building it. So if I could buy it at retail, that'd be easy. Are you on GitHub, Nick? No, I don't. We don't use GitHub for programming stuff. Maybe you could find my profile from college back in the day. I went to school for computer science, so you might be able to dig up my old GitHub, but I don't use it for anything. Copper's down 1.7. I'm wondering if there's like some copper miners I could go look at. I'm curious. Oil's down 4% now. How's Exxon looking this morning? Is that something I could sell puts on? I made a couple $100 last month selling puts on Exxon. I sold the 112 puts on Exxon, and I think I made like $350. Sold those puts. Exxon proceeded to go up, so I just kept the $350. College Nick. Yeah, that would be it. College Nick. That's my handle. Just kidding. Nick, I want your opinion. Do you think the Edge Finder would work if I have a scalping trading style / strategy? So I think the answer is yes. Now, yes, but okay. So if is the Edge Finder for day traders and scalpers? That's a good question. The answer is it depends if you're somebody who actually wants to use fundamental analysis in your trading. If you want to understand and utilize fundamental analysis, fundamentals, by the way, are absolutely relevant to day traders. There's this rumor out there that if you're a day trader, fundamentals don't matter to you. And that is absolutely false. A good day trader absolutely can take advantage of fundamental analysis. Do you want a quick example, a recent and very strong example of why fundamental analysis is super beneficial to day traders? Look no further than the recent economic data we saw in the NFP report. On NFP day, we had a massive beat in expectations from jobs. If you understood the full reading of the NFP report on Friday as a day trader, there were opportunities galore to look for scalps and day trades in favor of the US dollar. Or perhaps in the short run, maybe you found some short setups on gold. Maybe you went long stocks. My point is, absolutely fundamentals are for day traders. Day traders can massively capitalize on fundamental analysis. Scalpers may also be able to if you really know your stuff. Swing traders, obviously, that's what I do. I think, fundamentals are massive. But if you can recognize as a day trader what is happening in the financial data, absolutely you can spot opportunities and trade them on the lower time frames. So let's go take a look really quick at the DXY and let's go look at what happened on 8:30 on Friday. So at 8:30, you had, let's go to the 5-minute chart as a day trader, right? Can we even go find, there it is. All right. So as a day trader, if you recognized, oh my gosh, we just had a killer 5-star jobs report. It may have been tight and you may have been scalping in this, but you totally could look for opportunities. In my view, in my opinion, I'd be looking for long setups throughout that day. Any dips, I'm looking for maybe weaker currencies versus the dollar to trade. If I'm an FX trader, I could potentially look for possible shorts on gold or metals if there's the right setup there. My point is, if you know how to spot how important a fundamental force is, sure, that force might play out in the weeks to come, but there's going to be a sharp and harsh reaction in the short run that day traders absolutely can maximize potential out of by trading that volatility. So there's this theory, there's this rumor that day traders should just ignore fundamentals. And I think that that is absolutely wrong. Fundamentals are for everyone, and day traders totally can maximize potential gains by understanding how important a news data point is and riding the wave when you spot it. Does that make sense? Are we on the same page with that? Because that is so triggering sometimes. As a fundamentalist, I'm like, people are like, oh, no, I'm a scalper. I don't need to, I can just use technicals. And I'm like, okay, you can, but you just brushed over arguably one of the most important day trader secrets out there. Know how important the rumor and the news actually is so that you can ride waves. Yeah. So anyways, had to get that out of my system. So yes, the Edge Finder is a tool that is not built only for longer term. It is built for day traders, swing traders, scalpers, investors, position traders. This is a data scanning tool, right? It scans data. It doesn't tell you like, oh, trade the 1 minute long right here, short over here. Like that's not what the Edge Finder is. The Edge Finder is it is a software that scans market data. Does that make sense? Do me a big favor. If that makes sense, type yes in the chat. Again, if you're a day trader, don't sell yourself out of fundamentals. They're still very important for day traders. Gold's still not doing a whole lot here this morning. You got a bunch of sideways movement. 4-hour chart still looking, I'm looking for a breakout here. I'm looking for a break one way or the other on gold. If you can get it, then great. But if you can't, then it's just going to stay kind of sideways until further notice. NASDAQ's making a little bit of a push here. There we go. 15-minute chart's looking solid. I'm long QQQ, which is an ETF that tracks the NASDAQ, which is looking okay here this morning. We saw a bit of a sell-off yesterday. I've got my stop loss below. I would like to actually trail this stop loss or tighten this stop loss up a little bit. If we see this thing take out these highs, then I'm definitely going to look to trim my stop loss, at least just reduce my risk a little bit on this trade. Are you not classified as a day trader? That's a good question. For like tax purposes, yes, but I'm a swing trader. I think like the in the eyes of like the government or IRS, if you're trading, if you're doing anything that's not like long-term capital gains, then you would kind of be technically a day trader. Ask your tax advisor. This is not tax advice or financial advice, but I'm pretty sure that's right. So technically day trader status, but I'm not in and out of charts within 5 minutes, 10 minutes. I'm trading things, you know, I can hold a trade for a day. I can hold a trade for a week, 2 weeks, 4 weeks. If it's a really good trade, 4 or 5 weeks. You know, like let's say this position on the NASDAQ does really go. We start breaking out and we do this number. And I just kind of trail my stop loss along the way. I could stay in that trade for weeks, which would be great. I would love that. My best trades are usually my longest ones. My worst trades are the ones that are gone real quick because I get stopped out really quickly. You'll notice I don't have an actual take profit order on my trade here on the NASDAQ. So what I'm doing is I'm just trailing a stop loss, meaning if the market moves in my favor, puts in a higher low, I'll trail it behind. If I was short, I'd be trailing above price. What do you think on the Dow Jones now? I'm probably not interested in taking any trades on the Dow unless we get a dip down into this 41,500 level. I've had that marked up on my chart for the last few weeks. If it comes down there, then great. But I'm kind of already long indices via the NASDAQ. So I'm not hurting to get into more index trades as they are pretty correlated. But you can see there's some divergence. And sometimes people say like, oh, just, you know, go long the NASDAQ or just go long the S&P and just hold it forever. And you can do that. But in my view, if you have a little market knowledge, if you have a little bit of timing and a little bit of knowledge and experience in this stuff, picking which index, which sector can make a big difference. Like I'm long specifically the NASDAQ. Today's a good example. There are days where I'm, you know, where this is not the case, but today being long the NASDAQ is the best of the list, right? If you're in the Russell, you're flat on the day. If you're in the Dow Jones, you're flat on the day. If you're in the S&P, you're up 0.5%. If you're in the NAS, you're up 0.9. So, you know, with a little bit of selection process, sometimes you can find some really good setups. Edgefinder was too costly. Darshan, depending on where you are, we do also offer discounts for places where the US dollar is very expensive. If you are, you know, from India or from South Africa, we recognize that the cost of the dollar is very expensive there. So if you are somebody from a place where the US dollar is incredibly expensive, we don't usually discuss this on air or publicly. But if you would like to ask about our inclusive pricing discounts, we'll drop a link here in the chat to where you can do that. You can send a direct message to our team, ask them about your inclusive pricing options, and we will send those over to you. We do recognize that the Edgefinder is very expensive in certain places where the dollar is, you know, very, very costly. So if you are that person, please message us now here and we'll share some info. Make a video on Pepperstone Broker. I don't really have any experience working with Pepperstone. Nick, what about the euro dollar? What's going on there? Good question. I was looking at the euro myself over the weekend for a possible short setup, but let me go look at some. Let's look at some FX together. Let's go major currency pairs. Hold on, I'm going to refresh the Edgefinder. Okay, so the euro, from a technical perspective, looks like it might have lost its steam. So let me go. I don't know why the Edgefinder decided to go to sleep on us. It might be my internet or my computer. But anyways, just from a technical perspective first. So the Edgefinder has, I think we're pretty close to a bearish reading on the Edgefinder scoring. That being said, last week we had real solid jobs data for the US. That's going to swing favoritism to the US dollar in our scoring algorithm. We also had a bit of a double top formation here. So if we just draw in some resistance, boom, bam, resistance up here around the 112 level, euro came down, broke support here on this trend line and this technical support level. To me, it looks like it could continue to trend lower, especially with that dollar index. I mean, keep an eye on the dollar index. If we can break through, what is it, the 103 level, 102 level, like this 102.6 level, if we can break through that or retest support here, I do like the dollar on the long side, as long as some setups form on the edge finder. Okay, so we've got euro dollar as a bearish setup. If you get a bounce today, I'm probably going to short the euro. USD CAD's a +4. So the only reading on the major currency pairs that's interesting to me is actually a possible sell setup on the euro US dollar. So if I take a look at this, again, double top potential here. Well, I mean, this is a double top, right? Because you had a top, second top, and then we actually broke support here. So if you get something like a pullback, does this even give us a, if you're like patient on it, something like this could be interesting. We'll see if the euro gets a little bit more of a bounce today. If you get a push up into this area here, this level of resistance plus this 38.2% retracement, and you might even be able to get a tighter stop on that, like maybe just go below the 50%. Because you also have some resistance here though at the 61.8%. So you have options depending on your trading style. Like for me, I might just do this. So like if we were to get a pop in the euro up into this resistance, considering that the edge finder still has a bearish reading at that time for euro, I could potentially put my stop loss above the 61.8% retracement plus resistance point that I've marked here. My thought process would be, I think we're probably going to hold this area, but if we don't, my second line of defense would be that 61.8. And if we don't sell off after coming into this area, then my idea was just wrong. Does that make sense? I just want to map that out because I also just want to kind of mention too that, the importance of just understanding that a trade setup like this or an idea like this is just an attempt. Meaning, if I like the euro on the short side and I'm right, then great. We can make some money. I could trail some stops, see if we continue lower. And if I lose on this trade, then it's just a very small loss and I look for the next one. And I think that once you get to that point in your trading, there's some real comfort in getting to that place. Some of you probably feel that way now. Like you've gotten to that point where you're like, okay, if I just size down tremendously, then I don't feel so much pressure to be immediately right. I can't possibly take a loss because it will crush my, my soul. The point is, if you get, this setup, I like it, but I'm not going to like cry if it breaks up, right? That being said, I do think that there's potential for the euro to continue lower. And a bounce here after following a lower low could be our next lower high before a sell-off. So I still like the euro to the short side. Edge finder confirmation is nice. Would like to see it, get to a stronger bearish reading. Like if we get up to or down to like -7, -8, that would be great, but we'll see. Nick, what interval do you use? I usually trade off the 4-hour or the daily chart. So on the FX side, I do like the euro dollar. That's the only real currency setup that I see right now. Pound US dollar also is pretty weak, but on the edge finder, we're just neutral. So I probably wouldn't take that trade. Just going to filter for bullish and bearish setups. Is the edge finder good or useful for Forex traders? Believe it or not, Forex is actually where the edge finder was initially built for. The first iteration of the edge finder was built specifically for Forex. It is now all encompassing. We've got minor currency pairs in here. We got metals in here, major currency pairs, indices, crypto, commodities, and bonds. So we have a little bit of all the high level financial markets in here now. We don't have stocks because we do have an individual stock software that we're working on. Top secret, coming soon. So we'll see. Nasdaq's up 0.9. I mean, that's pretty crazy. The Nasdaq just seems very, very strong right now. If you notice, the Nasdaq regained like all of its losses since yesterday's sell-off. Yesterday, you had this big sell-off on spiking yields, etc. And now today, Nasdaq up. And meanwhile, the Dow Jones is in the red. S&P's up 0.5%. Is it semis? Are semiconductors running? We have like NVIDIA popping today. Look at that. NVIDIA's up another 3%. I think we actually got the breakout here. We discussed this in the stock telegram. By the way, we'll drop the link if you guys want to join the stock telegram. We put out analysis on NVIDIA recently. It's cool to see this. NVIDIA finally seeming like it might have broken out. We might have some continuation plays here going for NVIDIA. I do have a position on this one. I also have a covered call written at 136. So my upside for NVIDIA is probably getting capped pretty soon. If we keep pushing, my calls that I've sold will pretty much cap off my upside. But on the SMH side of things, I don't have any cap on this one. And there we go. SMH really making a move here. SMH is up 1% here this morning. That's probably part of the reason why the NASDAQ is up. What I'm looking for is a breakthrough this high in order to trim my stop loss on the NAS. Hey, Nick, Proud Edge Finder here. Just wanted to ask if you use any indicators from A1, or do you use Edge Finder, or do you only use Edge Finder? If you're talking about like the technical indicators that we have, I do have them saved up here. So for example, one of my favorite tools that we have is the extension zones for TradingView. We wrote this code here for the A1 extension zones on TradingView. It's not available for free, but it's a really simple indicator here that basically shows you, extreme readings. Like for example, you can see when the market gets very, very overextended one way, it starts poking into this green zone. When it gets very extended the other way, it starts poking up into this red zone, right? So I really like this, especially for some of my, options trading and mean reversion trading stock stuff that I do. I love this indicator. I apply it to my chart pretty frequently. And then I have just the pure price action view. So I totally do use them. If you're looking for those indicators, you can go to a1trading.com. Let me see so if you go to a1trading.com, go to, it should be under our software somewhere, indicators, TradingView indicators. The one that I like is the extension zones. But we have many different MT4 indicators that we've built code for, TradingView indicators. I do use some of the MT4 stuff as well, just for some of my FX trading. So the answer is yes. We pretty much use everything that's on our site. Of course, the Edge Finder is my favorite, but yes, plenty of other cool indicators on the TradingView side as well, and MT4 side. If you're an existing Edge Finder user, you can get those things for super discounted rates. If you're a past customer with us, we always offer you big discounts on other things that we offer. So if there's anything you ever want from us that you don't yet have, the easiest way to get them is chat with a member of our team. Lee says, what's the indicator called? It's on our website. You purchase it there. It is the A1 extension zone. If you'd like any of our other products, you can find a full list on a1trading.com, and you can chat with a member of our team. We have like 7 trillion different software tools that we've built over the years. Nikkei's up 1% here. China's still down. I mean, look at this. Chinese stocks down 10%. Really crazy. Also, thank you to the producers. There's our indicators page. So if you want our TradingView indicators, you can go to our website there. super. I love the extension zones. I find them to be like really they can keep you in line. Like if you're like, am I chasing something? Sometimes the easiest thing is for me to just apply this and be like, okay, if we're at the extremes, maybe so. By the way, look at silver. Silver on the daily chart looking like it might actually be flipping to a bit of a bearish price action read. Look at oil too. Oil is absolutely coming down here this morning, erasing that big pop that we had yesterday. Actually, if this candle were to like close down here, then you fully, even though it was a huge candle yesterday, you'd fully have engulfed bullishness. And it does make sense. Again, the Chinese market down is going to hurt the oil demand story. Massive growth from China is, of course, going to demand a lot more oil, and less expected growth would hurt the story for oil. So anyways, guys, we're going to now shift gears. We got Chris Pulver coming in to share his ideas coming up in the markets just shortly after this quick break. Before we get that, I just want to mention too, if you're an existing member with us, I know we've been talking all sorts of different products and stuff like that. We've got one that is definitely worth your time. It is the Pulver Alerts. It's a new service that we launched, which allows you to see trades being taken by Chris Pulver. He's a money manager. He's been trading for like 20 plus years. Dude is super experienced in the financial markets, and it's why we have him on the show all the time. So I know I've learned a lot from Chris. Stick around. I'll be speaking with him in just a second to go over what's happening in the market. Stay tuned.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
All right, there you go. A little Halloween themed Chris Pulver alerts.
That's right.
Promo there. Hey, Chris, how's it going, man?
Good, Nick. What's happening, man?
Not a lot. So you got some interesting divergence happening this morning. NASDAQ's up, S&P's up, Dow Jones down, Russell's down, but then China's down. Do you know anything about the story there?
Well, basically, it was something to the effect of they're not delivering a second round of stimulus, or they're talking about not delivering that second round of stimulus, and the market is like, we wanted the fiscal bazooka. And so the market just kind of punished it on the rumor. I did read I posted this with Frank this morning. If we go to HSI, I think that's where the headline was that I read this morning. So go HSI. Actually, I'll go back to another chart. 1 second. SPX. Go this workspace HSI, and it was something like this one: plunge on no stimulus, no additional stimulus. They break their winning streak. Shed 9.41% of the Hang Seng, down a ton. Investors who were hoping for the announcement of further enhanced economic support policies at the National Development and Reform Commission's press conference on Tuesday were left disappointed, according to this report. So, Alibaba's down. So basically, they're just looking for, we said it, we did it, we're going to do more. And I think it's because the summary was there's like $140 billion to like $280 billion, and they just were kind of vague and unclear on if there's going to be another chunk coming in. Now, I did notice somebody had put a report in here. This guy, analyst Ding Shuang, says that he remains hopeful for further stimulus measures at the end of the month, despite the red light today. But, I look at it from the technical side. A pullback was needed, or else this was essentially a broken chart. But like I did talk about this. My biggest concern was that if we go rip to the upside and we rip to the downside, that's not what I want to see with price action. So what I'm hoping for is today's sell-off is actually quickly stabilized right around this 38% zone. And if things stabilize, that's probably a good thing. But it could be taken both ways, Nick. We could have this be a bear flag and then more downside. Or this is just putting a pause in this rip, and then there's some stabilizing here, and then the headlines are like, same thing. There's going to be a little bit of a floor. There's going to be more stimulus. They'll roll out something else, or it drips into the headlines, and then we're back up to the highs.
No,
so I'm not that
worried
worried about
it. I think if you're looking at this China move, as you said, it was probably due for a pullback. That is like a pretty healthy thing. A rally like this up in the near 30%. in such quick succession, that's normal to see a pullback. But as you mentioned, what Chris, for those of you who are just tuning in, we're talking about Chinese stocks. What Chris mentioned is that if you see this thing completely reverse, like if you do this big, caret symbol thing on your keyboard, go shift on the 6 key. If that's what happens, right, then what you're talking about is probably more of a bear looking chart. That being said, I actually agree with you. I think that this dip probably gets bought as long as the global outlook situation still looks okay. And for me, Chris, what that actually leans over towards is like, are we going to get an area that I like oil? Are we going to get some dips in oil prices and maybe even like energy stocks? Like, could we get a good dip in energy stocks? I've been wanting to buy a little bit of, energy stocks, maybe sell some cash secured puts on Exxon again. I made some good money doing that last month. So I'm the same way. I view this dip as a potential opportunity, whether it be Chinese stocks or the ricochet effects that has hit the commodities world. I think you might get some discounts out there. You got silver's down 2.7, you got oil down 4.3. These things needed to pull back, and a little bit of scare on the stimulus front is just one side of the story for China, right? You still have the US economy looking strong. You've still got the Middle East uncertainty that's out there. I feel like there's a decent case for dip buys on oil and maybe some of the other raw commodities as well. So that's where I'm at. Not financial advice as always. I could be dead wrong on that, but that's kind of where I'm looking.
Yeah, I also think there could be some heavy amounts of manipulation here with oil. I mean, this is a lot of volatility here in the last, let's say 2 weeks of trading. I mean, for us to go up around 18% oil and just today's candle alone's down 4%. I don't know if I talked about this with you yesterday, but I was in a webinar that talked about the prices of oil. That basically, if we're greater than 85, then Trump may be the winner, and if we're below, let's say 65,
oh, interesting,
Harris could be the winner, and if we're in the middle, it's going to be a coin flip. I looked at like 538 polls yesterday. I think Harris had a slight lead, like by 2 points or something. But oil prices, I don't know. I'm just curious if there's like ridiculous positioning here, where if we're staying in this 75 zone, there's not going to be a clear winner necessarily. But anything that spikes up above 80, 85, it might lean towards that's enough of a pain point for the inflation story to come back up and rear its head that everyone just wants change.
So you're saying like this, Chris, I've mapped it out for us. So you're saying
Right.
T-Man wins up here, H-Lady wins down here, 50-50 in the middle.
That's exactly right. Yeah.
Okay.
Yep.
Okay. No, that's
so
that's
in one chart, that might be what decides the election. So I think it'll be interesting to see how it all plays out. And I just think there might be some heavy manipulation in prices where what is Harris, what does the Democrat side want to stay in power? They're going to want to see oil prices go right back down to the lows. They're going to want to see the lowest possible inflation reading, which does come out Thursday with PPI on Friday. So one good thing going into this election would be a better than expected, better than forecast inflation data. Yeah. And that's going to be a critical spot. Now, I still think that it's maybe the low that we print, and we don't see those lows for a while. Just by watching that Trueflation measure. I mean, we're up off the lows by like 0.5%. And this stuff in oil is, I'm happy. Other than energy stocks, I don't want to be in like oil futures any longer. I got out of those with some profits. So I'm just going to wait, man. I'm going to wait and see if there's decent pullbacks and maybe take a couple of defined risk trades, but I'm not looking to do anything crazy and kind of call bottoms. There could be a lot of crazy stuff going on here in oil in the next couple months.
No, and again, to your point, Chris, about you do have an election right around the corner, and let's this is a bipartisan thing because everybody who is the standing president or close to the incumbent, if you're the president right now, you're going to do whatever you can to make people feel good ahead of the election. And I'm not saying that to slander the existing administration. I would say the exact same thing if Trump was in office, or if there was a Republican in office or a Democrat was in office. It doesn't matter. Human beings are going to do what they can to capture the vote right before. And the way they're going to likely do that is, as you've just mentioned, maybe try and keep oil prices, pump that as much as possible.
Yep.
Signal more rate cuts. These are not things that I'm thinking are big conspiracies. This is
Right.
just human nature that is very obvious, right? If you're in your Fed chair and you want to keep it, if you're the standing president, you want to keep it, or
Yep.
this is just human nature. You want to keep sitting where you're sitting. These are the things that we might see a higher likelihood of. We'll bend it right here to make this work. So again, I wouldn't be surprised if inflation continues to cool and things look real solid for the story, at least until the election. They're going to do whatever they can to keep that story as tact as possible. And again, I'm not saying that I think that as soon as that ends, that all hell breaks loose and that it's completely reversed. I'm not saying that. It might actually be a pretty soft landing outlook, but I do think that whatever they can do ahead of an election is what they will do, because that's what I would do. I'm not
Sure.
accusing anybody of anything.
Yeah. Don't rock the boat.
Right.
We've had this discussion. I've been fairly impressed with the market's ability to not feel like the Fed has broken anything.
Mhm.
Yes, we've had some scares. I mean, I would say that the late July, August sell-off was a bit of a scare, but that was blamed on Japan, even though it really was the reality of the U.S. market.
Yep.
The one thing that does concern me going into the election would be earnings season, because a lot of these stocks, Nick, at these all-time
Yes.
highs or close to these all-time highs, a lot of stocks are priced for perfection, man. And earnings season might be okay because corporate profits have been good, and I mean we've had growth, and there's been like a bit of a broadening out in the markets, which has been healthy the last couple of months. But I do think that economic data wise, same type of thing. We're priced for perfection. I don't think
Yeah.
the U.S. can afford to have a higher inflation reading on Thursday, Friday this week. I don't think the earnings season can afford to come in lower than expected, because basically, even if we have the earnings per share and the revenue, even if they come in lower but barely lower, this market might absolutely punish a stock that's not just blowing out expectations.
Mhm.
I just feel like that's the level of complacency and expectations that the market has set for itself. It's like everything's been so good that we've hit these all-time highs, and now to justify staying at these all-time highs or going to new all-time highs, we're
Yeah.
gonna have to have some really upbeat earnings coming out.
And that's the thing, Chris, is I think that you mentioned something there too. The Thursday and Friday risk, CPI and PPI, is the bigger potential move would be to the downside, I think.
Yeah.
However, the probabilities of it being a good print or a acceptable print
Hmm.
are right now very high, right? The
Right.
expectations like, okay, we're going to keep cooling. So that's why the potential big payout would be on the short side. If you were bearish going into that and you saw a big slide on hot inflation, I totally agree with you. I don't think that, this market is priced very much for perfection, priced for good news after good news. And if you get any upset to that story, which could come in the form of sticky inflation again or bottoming out inflation,
Yep.
the risk to the downside is there for sure. I kind of think that you take the full picture. You say, look, we've got the Fed still in the direction of rate cuts. We've got corporate earnings overall trending up, but as you've mentioned, that story needs to hold tight for this thing to stay the way it is. Otherwise, you got trouble.
Yeah, I listened to an interesting podcast yesterday. They were discussing. Have you heard about like the late cycle expansion, which is
Hmm.
essentially what the economists are saying. This is where we're at right now. Is we're in the stages of like
Mature,
this
yeah.
rotation into maybe the fourth turning is what like the doomsdayers are calling it. But we also have like cyclical expansions and contractions, and so if we're going into like this final cycle, where this is where everyone leaves growth and goes into value, gets into commodities, gets into like dividend stocks and utilities and things like that. This potential rate cut by the Fed, and maybe another proposed 25 and 25 by the end of the year, it might create more of like a cycle reset. And so rather than actually having like a late cycle expansion, which is like the end of the move, if
Mhm.
it's reset and we actually go into like a growth phase again, it would be weird to see that happen. But that's arguably like what the Fed could be trying to create. Is we'll just kind of reset the clock and go back to, let's say, Q4 of 2022, when the market started to rip and we created like another bull market.
Yep.
If the Fed is able to do that, like that's a very impressive accomplishment. But again, all these things are kind of priced to perfection. So I think until, I mean, obviously we'll digest more data this week with inflation. But if the market just doesn't fall apart on itself, it might be stable enough to just maintain the course, path of least resistance. It's a little rocky, a little shaky. I mean, look, man, we're trading inside the same range since FOMC. If you
Yep.
go back to the Thursday, the day after FOMC, we have not moved really anywhere in about, let me see what that, I mean, that is, I don't know how many days. I guess I could check the days here, but let's go to the 18th, 19th of, what's the 19th now? How many trading days is that? It's a lot. I mean, from the FOMC, even FOMC low to high. Yeah, let's go to this one. So we're going FOMC post. That's 13 trading days of price doing virtually nothing. Virtually
Wow.
nothing. So
Yeah, it's been a
choppy.
really interesting choppy market here, just back and forth in the S&P. By the way, just an update on the commodities. Just someone mentioned things just slipped again for oil, silver, etc. You got silver down 3.5%. I mean, that's a pretty big move. Chris, I was
Yeah.
I was texting you during when I was over in Greece. Had a really great
Right.
silver position that was running. I did end up taking profits on that. I'm feeling really grateful right now because all of that got completely washed away with this big reversal here. And again, I do still sort of lean towards, be patient, but some of these things might be setting up for some discounts. Maybe oil, maybe copper, maybe silver,
Yeah.
I don't.
Copper is a big. I think copper is definitely facing some headwinds with China dumping hard the way that it is. If China turns back up again, then copper is going to be okay.
It's such
I
a
mean,
China trade, yeah.
yeah, but copper really started to rip on China, and I mean we've had a pullback now. Copper's down about 6.75% or so, 6.7% or so.
Yep.
I do have a pending order in copper, but I'm waiting to see if price will come to me. Let me see what that one's pending at. So I've got a
Copper futures, is that what you're
copper
trading on?
futures. Yeah, I'm trading HG.
Okay.
So 4.3 sell put with a 4.25 buy put for a 0.025 credit. That's a $625 profit for a $625 risk. I looked at this potentially as a bullish run. We have a correction in here that's given us a bit of a break of the tops, and so if like a right structure sets up and we can get back to the highs, I want to see if copper. I mean, if we have an expansion still, China included, China US included, copper is going to be okay. But yeah, this play is probably going to require some additional bullishness and stability out of China, I would imagine.
Got a big update here too on price action wise with gold. We've been watching this range on the 4-hour chart here. The last same thing with S&P. A lot of charts not really giving us any decisive movement. Gold here, in my opinion, Chris, it's had such a good run this year. I'm like the gold perma bull, so it pains me to say this, but strong labor data, and the Middle East situation, they're conflicting forces, right? You got like the uncertainty in the world going on effect, which is bullish for gold, but that labor data coming in strong, and pushing back on how many rate cuts we're going to get may signal, we might have put in my opinion, we might have topped out for gold for a little bit here. We might take a breather, and even a healthy pullback in this upward trend could be, a move back down to 25.50. It doesn't make me a mega bear. That would just be a healthy correction that we haven't had in a while.
Completely healthy correction. I've been talking about so many stocks and so many, I mean, gold included. I just want to see a pullback towards a really simple dynamic support level. So the 50 period moving average, the 100 period moving average. I even have a 21 in here that's really aggressive, but I mean, if we've hit the 21, we typically hit the 21 and the 50 together. So I've just eliminated the 21. I want to see if we pull back to the 50, which right now is settling right where you said, 25.50 or so.
This blue one's the 50 on my chart here, guys.
Yeah.
So looking at that, I like that a lot. I think a short-term trade here, maybe the next few weeks, could be, and again, I'm saying this cautiously because we're talking about fighting a very strong uptrend this year. So I'm saying with small size and caution, if you get some lower time frame trend reversals, like the 4-hour chart starts marking up, I may look at that as a contrarian sort of short-term trade the pullback, but do so with fundamentals, I think, that back this. Because again, if you get the China story weakening, if you get economic data from the US still looking pretty strong, and then let's just say that good news comes out of the Middle East, that is super bearish for gold, right? If you get any gold and oil, by the way.
Well, but does it have to be bearish for gold if it's Because what about like a weaker dollar? I mean, if the dollar gets weaker, I think that's
Yeah.
still a good trade for gold. I think that the central banks around the world have still been buying and maintaining bid. One thing I read this week is the retail side of gold has really not been pushed. There's not a lot of retail traders that are
Mm,
heavy in gold yet. And so
interesting.
if retail traders start to flow into it and start to get more and more active in gold, that also could be a little toppy, right? Because all of a sudden it's
Yeah.
like the dumb money is coming in late to the party, trying to buy essentially a bull market that's been going on all year. So that could be another catalyst for retail side comes in at these highs, and then gold corrects and dips a little bit, which I think. I mean, we're talking 25.50. Look, man, this is still a healthy bull market all the way back down to 23.50.
Yeah.
I'd still be looking to buy dips at 23.50 on gold because that's really well supported on the higher time frame. The problem is if it's a violent pullback, that's going to feel a little nasty. But I'm still pretty interested in maintaining gold positions. What I'll probably end up doing is maintaining my small GLD positions, and as I've dollar cost averaged in over the last couple of years. But my GC, which is gold futures, I'll
Yep.
probably just take a handful of credit spreads at these individual levels,
Okay.
and just let them play out. Like I'll probably go out 60 to 90 days, give it some time, and they're cash settled. So I mean, as long as I give them time, let them expire, I
Yeah.
think gold's going to be higher in the
Is
next
it-
6 or 12 months.
One other thing I want to mention before I'm going to back out and let you and Frank continue on for a little bit.
Yeah.
Last thing I want to mention with gold here. So gold has traded up this year on rate cuts and also probably some election fears. But remember, buy the rumor, sell the news, right? Once we
Yep.
know who the president's going to be, once that is no longer an uncertainty, I would not be surprised if you see some corrective moves on gold just because it's saying, okay, one uncertainty is off the list. Remember, gold thrives, everyone who's listening. If you have Taiwan, China situations flare up, Ukraine, Russia, Middle East stuff, elections, Congress runs out of money. Those are sort of stimulus events to the gold price. But when you lose one of those, you also have to recognize that losing those stories from the fear factor can do the opposite effect. So, you marked out, or you mentioned 2350, Chris. That's sounds like a crazy ways away, but guys, that's just a 38.2% retracement on
Yep.
what has been a remarkable year for gold. I'm still long-term bullish, but
Yep.
just because you're long-term bullish something does not mean you can't look for, short-term. Hey, I think we could see some weakness here. So,
Yeah.
Chris, I'm gonna let you and Frank continue the show here.
Okay.
Before I back out and give you guys the floor together, guys, if you guys want to see the trades being taken by Chris or myself, you can get access to our signals within the signal service. Chris does also have his own thing. He has his own YouTube channel. You can find him on YouTube. You can find him on Twitter. But if you guys would like to sign up for the Pulver alerts, send us a direct message. We'll get you hooked up with those. If you're an existing member and you don't already have access to Chris Pulver's trades, send us a direct message and we'll get you hooked up with them. All right, you guys got it from here. You and Frank are right after this quick break.
Perfect. Thanks, Nick.
See ya.
Gentlemen, how are we today?
I think someone turned off the lights here, but
It's whatever. So you're here for a job interview, Mr. Nicula and Vlad.
I think we have a lot to bring to the table.
What is that, French? You guys from France?
Fort Lauderdale, actually.
Well, you flew in today.
Yes, the back window was open.
You guys traders? We could use some more help with managing the Discord.
In some ways, yeah. We want to be traders to your company.
We are very good at this sort of thing.
Did you just say traders or traitors?
Yes, traitors.
Do either of you have any background in this industry?
Oh, yes. Hundreds of years.
Look, I can already tell this is not going to work out. I'm sorry, but I love the capes though.
Trading can be scary. Need a safe space? Join the A1 Trading VIP Discord community. We have hundreds of committed traders inside sharing trade ideas, market news, and analysis, alongside our 4 professional traders. Join today with the link dropped in the chat or in the description down below.
Hi, I'm here for my 10 o'clock.
Oh man, you guys are killing it with those little promo spots. That's awesome.
Thanks.
Frank,
What's
your
up,
acting
Chris?
skills are on point, dude.
Yeah, you think so? I've been practicing.
I bet. Lots of time in front of the mirror, I'm sure. Good stuff. All right, man. What are you liking today? We've got China getting smashed. We'll see if that turns around. Yes, no, maybe. Let's see.
I like watching gold right now.
Yeah,
Been wanting
gold.
it to fall.
Did you notice the volume? I looked at the trading view on the bottom here. We've got 3 or 4 pretty big histograms at the bottom showing that volume is picking up here as we started to sell off a little bit more. I think this is a good thing. I'm not really interested. I'm not sure if you're taking any short positions on gold. I am not, but I'm okay just kind of letting gold fall and trying to pick up some credit spreads. I mean, anybody that's in the pulver alerts, this is probably what I'll be doing. If we come down to the 50, the 100, or anywhere close to the 200, I'm putting on some GC credit spreads and probably some GLD credit spreads. Not going to be complicated. Go out far enough in time, probably 60, 90 days, maybe more. I want to do, if I stick to the futures contracts, then I can have them be cash settled and there's no assignment. But if I go GLD and we drop far enough and fast enough, there might be additional assignments of GLD, which I'm going to try to avoid because I already have the shares, and I would just be looking to buy more shares with a dollar cost average. So
Yeah.
what do you like on gold right now?
I like that it's falling, but I'm
Uh-huh.
wanting to wait for it to hit 2,600. So
Okay.
I think I'm gonna probably look to get long there. I don't know if I'm
Okay.
gonna do like bull put spreads or just straight out buy gold. But what's that? Oh, James just came in and said,
Oh, me? My bad.
Your screen.
Yeah, what the heck? I was wondering why Nick had the screen the whole time. I'm stupid. All right, there we go. I was looking at the if you have volume at the bottom, my XAU shows that we've had some pretty decent volume spikes the last like 3-4 days.
Yeah, no, I'm getting ready to potentially go long there.
All right.
It seemed like it was correcting last week, and then we had news in the Middle East, and it brought prices back up. So I think that was just kind of just a fluke for price action.
Sure.
So I'm glad that it's finally retracing. And on top of that, I trimmed my Oxy position yesterday, which ended up working out pretty nicely.
Yeah, let me see where that's at. I still have the shares and I'm still covered. I think I've got mine. I'm trying to repair mine to around $54. So I've already lowered the cost basis. Let me see. I'm going to track my Oxy position. So let's go OXY right here. So right now, got some shares. So my break even is 52.71 and current price is $54. I have a covered call at $54, Frank. So OXY, my margin accounts have some shares. I have a covered call, I think, to the 25th, which is not next Friday, but the week. I think it's towards the end of the month on the 25th. Let me double check that. So OXY right here. Yep. So I'm covered at 54 with a break even of 52.71. The nice thing is if that doesn't get called away, I will continue to be pretty aggressive on just adding covered calls and just kind of repairing. I don't need a lot. I need, if I can walk away with like $1, $2 of profit, I'll be happy to like repair the stock. So, yeah, I mean, you trimmed your position. Are you still in like shares, or what are you doing with your Oxy? What's your position?
I still own shares. I had like
shares. Okay.
I think I had about 10% of it in my account, and now it's much less. So
okay.
I just took profit.
I still have a long put as well. So I still have a protected put at $40, trying to get it called away at 54. We'll see how that plays out. My long put actually is a farther expiration, which is interesting. I think I just did that to protect it before I added in the covered call. Did you see that there were upgrades yesterday, or downgrades rather, on Apple and Amazon? I thought that was interesting.
No, I did not see that. Is that why we were selling off yesterday, or like what was
possibly? So Apple downgrade was they were downgraded from like buy and overweight to hold, and then some of the prices got downgraded to like, I think it was 200. I don't know if I took a screenshot of this or just saw it. Let me find it. I've got it here on Twitter. I'll find it. I know Amazon's like maintaining a buy from like most of the analysts out there, but it was downgraded like pretty heavy. Somebody downgraded from like a $220 price target to like 185, and that was a bit of a shock. We go to
Yeah, I was confused about yesterday, and I guess I'm confused about today as well because we are
okay.
just taking off. If you look at S&P right now,
Yeah, I see it rip into the upside here in a few minutes. Apple was maintained as a strong buy. Currently 221 with the high analyst upside is 265. And then there should have been Amazon here. So we have Jeffries downgraded Apple stock from a buy to a hold, pointed to inflated iPhone expectations growth due to limited new features of AI integration. Price target 205. So Apple stock trading at 225. It was one particular downgrade, putting the price target at 205. Based on 45 ratings, it still holds a strong buy consensus. I mean, Apple is essentially going to be a forever stock there. And then Amazon, SMCI was, let's see here, price targets range from 130 to as low as 32.50. Yikes. Then there was an upgrade or downgrade on Amazon. I thought Amazon was in here too. Amazon was downgraded to, maybe it's in my actual news for TradingView. Market chatter, Amazon's Fire TV targeted, former Amazon executive supply chain, market chain, nope. Any news here? Early trading, Amazon shares fell. Yeah, there it is. Downgrade. Wells Fargo fell 3.1% following the downgrade by Wells Fargo analyst to a neutral rating, citing multiple headwinds for future profit margin expansion. So I still got a collar on Amazon. We're trading at 182. I mean, Q4 rally and a type of Q4 seasonality to the upside could be good for all stocks, but likely a broader recovery. I also think, if we're going to have a broader move, and we probably have to get through all this nonsense with the election, we got to survive all the geopolitical stuff churning in the Middle East. The Russell is still potentially a good-looking trade. Somebody pointed out this week, I did a comparison, like a 10-year performance of the AVUV versus the IWM. I thought this is an interesting chart. AVUV versus IWM performance. This is an ETF comparison tool. Look at over the last 10 years. AVUV is in green with 106% performance, so annualizing about 10.6% a year, and the IWM is annualized about 5.2% a year, which, if anybody wants to trade the small cap game, AVUV is a pretty good comparison. And because it involves additional, it does like swaps and futures contracts, and so it's a little bit more actively managed than just the 2000. So the Russell 2000 versus you've got some futures and additional derivatives in the AVUV, and so it's been outperforming. So I do wonder if we have a small cap rally by the end of the year, how is that looking for small cap IWM or AVUV or equal weighted, Russell compared to like the large cap S&P or the NASDAQ. But I don't think one goes without the other, Frank. I think we have to have, if Russell's going to go up, I think it might be just outpacing the NASDAQ and the S&P, if at all. But I don't know, that remains to be seen, right? I mean, all these markets are pretty well supported. I still like the trend lines. What do you use, by the way, on your charts? You're using simple moving averages?
Yeah, I just have
okay.
250
okay.
RSI, 14-day RSI.
Okay. So I've got exponential on mine, but AMA is a little bit more aggressive than the simple, but same concept, super widely accepted. And very repeatable. So I'm looking for dynamic supports on my EMAs. SPY is pretty well supported, even up to a 3 to 5% pullback, really well supported, even up to a 9 to 10% pullback, still pretty well supported. The NASDAQ is hanging in there today. I'm looking at the SPY right now off the gap higher. I mean, the SPY is up about $4 today, and we're not above the highs from yesterday, or actually the highs from Friday. But I've got some gamma levels starting to light up here a little bit. Ooh, hey now.
What are you looking at on the SPX right now? Because this
SPX.
morning I was waiting on a bigger move before I took any sort of credit spread.
Yeah.
But we just kept going higher all morning. So I was wondering, are you looking at, maybe a bear call spread on the upside, or are you just looking to go long back to the highs?
Well, I think if we drift up today, towards the highs, we have had 1 fail at the highs, 2 fail at the highs, 3 fail at the highs, 4 fail at the highs, 6 fail at the highs. I think that's the pattern right now. So if we get back up to these intraday highs, I mean 57.65 or so, is that our recent all-time high? 57.67 is a recent all-time high. I mean, I could see price stretching up to that and then failing. I don't know. I mean, I might consider, I don't know if we're going to blow the top off. I mean, is it possible that so we've got inflation on Thursday and we have PPI on Friday. I'm just curious, if I looked at like an SPX broken wing butterfly and did a call fly up here, if I could get that in the money and collect like 70 cents on the dollar, I might actually take a look at that trade. Because I already have a call fly to the downside. I guess I do a put fly up here, put it in the money so I can collect, more premium. Let me take a look at that right now. So if we're trading here around 57.65, let me look at an SPX put fly. SPX put fly. Now, if I end up taking this trade for a Friday expiration, the high is around 57.65. That would be my pin price on the upside. So if I did a 57.65 put fly, move these down, 57.65, I'd sell that one, and then there's my split. So
you're trying to capture price at this point, and if it goes higher, you still make money, but just won't be as much. Okay,
that is correct. Now, if I took the trade like I'm discussing right here, if price goes to fresh all-time highs, and the reason I'm saying this is historically we see like a lot of Thursdays and Fridays during the trading week will actually be the highs of the week. And so if CPI data on Thursday is enough to get this market to jump up, then we could break the highs on Thursday, maintain that, and then Friday just kind of melt up a little bit more. And maybe, next week is a pullback, and if there's gap fills and things like that. So what I try to do here, like right now, I don't like the way the trade sets up on the SPX because I'd have to go further in the money. So right now I'm only getting about $2.30, $2.40 a credit, and I'd be risking roughly the same. So if I get 240, I'm risking 250, 260. I want to flip that where it's like I want to get like $3 or $3.50 of credit and only have to risk like $1.50 or so in risk, and then have my profit trap and stuff if that's sitting there at expiration. So what I could end up doing is let me check on my ES trade. So I've got the broken wing call fly to the downside, but I think I'm going to do this on ES. Frank, let me look at the ES feed, because if I put this on ES and we're right back up towards these recent highs, the recent highs we've seen are around 58. I've got 58.20 to 58.30. Let me see what that were to look like on a put fly. So if I go ES for the 11th, and I'm looking at 58.20 to 58.30. Let's do a put fly here. So 58.20. So this looks a little bit better. If I collect 275, 250 a credit, it's about a 1-to-1. So if I risk $125, I'm gaining $125. That would be a trade that looks like this. So if you're familiar with the risk profile, if price goes up, then this is a way to look at it from the options platform. So if I have price right here, I have my risk, I have my trap, and then I have my credit. So if price goes up in direction, gets to my bull trap, this would be the pin price around 58.20 to 58.25, and I would have my 250 credit here, which is the equivalent of around $125. If I'm wrong, I'm risking $125. And my potential profit trap should be like over $300. Profit trap is showing 375, which is the hardest thing to get. So trapping it right here, end of day on Friday, will be extremely difficult, but it's there in case prices, added or going through it. So if I did take a 250 credit and I could close it for 25 to 50 extra cents credit, that'd be great. But obviously this would be closer to like $6 to $7 credit as like an optimum trade. Sometimes you're almost better off waiting for the futures trades to settle, because during the day, like the bid, mid, ask, late in those expiration cycles, you might only get like 40, 50 cents of extra credit if you're closing out yourself. But if you let it actually cash settle, that might actually give you the full profit that you're wanting. But price has to be right there, and that is extremely difficult. So anyway,
Gotcha.
I don't mind looking at the trade. It's going both ways, and here again, here's risk, right? I have a in the money call fly down here, and if I put an in the money put fly here, I still have risk in the middle of all this, Frank. So am I over trading? Maybe. I could be over trading. If I went out maybe a week, that's probably a better solution, is go out a week or so and don't even worry about it. If we go higher the 18th or we go lower by the 18th, I think I'm going to do that because I'll give myself another week or two of price.
Do you think that CPI is even going to cause any big reaction?
I don't know. I mean, it hasn't been a reaction, but I think it's going to matter this week simply because I think the market's all gung ho about like the employment side of things getting better. Obviously, oil has been a big factor that we're getting lagging data here. My biggest concern with inflation this week is that this is going to be lagging and not reflecting the last 2 weeks of oil prices. And so if we print 2.3, well, I mean, it's because shelter's been lagging the whole time. This may not pick up on any of the recent data with oil prices. And I think that we could print 2.3 and the market might get excited about it. But I don't think we're going to see 2%. I don't think in 2024, this CPI year over year is going to print 2%. I think we're going to be printing maybe 2.3. And then if oil prices stay elevated, that might be the lowest low we see for a while. So
Yeah.
I don't know. I mean, I think it's enough of a reaction for this week because it's a combination of CPI and PPI on Friday and earnings season kicking off the financials. I'm really curious what the banks actually say. We have Wells Fargo, BlackRock, JP Morgan, all of them reporting on Friday. They're not really earnings trades that I want to actually trade, but rather they are the forward guidance and the the outlooks that I'm interested in kind of seeing what the financials consensus is. Does that make sense? Because if
Yeah.
they're optimistic, that's good, but who knows? One thing we can look at though, while we've got some time, are we good for the next little bit?
We
Do
have
Nick
Nick
coming on?
Phillips in a couple minutes.
Okay. Then perhaps you and I can price this in tomorrow while we're in session. But Domino's Pizza, Delta Airlines are two that we have earnings on Thursday for, and so DPZ is trading for around 415 right now. I do want to see what the spread situation looks like. If it's fairly tight, let me go back to the broker platform here. And I'm going to consider that that butterfly trade on ES and maybe go out to the 18th or maybe go out to the end of the month and just let it happen. Or honestly, like go out past November and just let price do its thing. And I don't know. I think I did this video for James yesterday, and when I looked at my trade history, I just took a lot of trades. Like I know that I take a lot of trades. I know I trade pretty like probabilistic, and it's like this trade should work. Here's a probability. Just take it. All these different instruments. I'm kind of instrument neutral at times, and I'll just take a trade for income. But my bigger wins have been pretty good strategies. It's been diagonals or long term stuff. What I discovered is I did a lot of probably over hedging this year, and so some of my index option trades have shown small losses, and a lot of that is just because I've hedged so consistently and periodically that against my core position, I've taken losses. Like as the market's gone higher, it looks like I'm a terrible index trader because I've just been hedging, every probably 45 to 60 days, which is annoying. And so part of me is like, man, hedge less or hedge with cheaper hedge prices. But at the same time, it helped me during August, helped me during April. And anyway, I looked at it, thought it was interesting. I had a lot of green in my transaction history, but a lot of my index trades were red because of those hedges that I periodically take. That doesn't matter. Let me look at Domino's and look at the spreads. We have a Thursday earnings, so I'd probably go to 18th. Expected move is around $32. And I just want to check really quickly before we go with Nick coming on. What is the percentage that we can see here on DPZ? DPZ. So the expected move is around 9%. Now I have a 10, 7, 8, 9, 8 and change, almost 9, 7, 6, 6, and 9. I'd say 9's on the high side. I feel more comfortable doing like an 8%. So 0.08 times 415.45 is a $33 move. Tasty's implied volatility and market maker move has it around a $32 move. The problem is the spreads are 250, so it's a little wide. If I did let's go a sell. If I sell the 415 and I sell the 417, I could get 34 and change of credit. I suppose that takes care of the move. I'm just wondering if I were to I don't want to do credit spreads because this is an expensive stock. I don't want to have the buying power tied up. But man, it'd kind of be nice to see Domino's just do a little bit of nothing, and maybe be a seller, like similar to what I did on Micron, but try to keep it somewhat contained within like that $35 to $40 window. So I'll look at this one tomorrow with you and kind of price this out. I might do a similar trade where if I can, sell the middle and then buy out here and keep it within that like $34 to $35 range, I'll probably go out as much as $40 if the price is decent. I was going to say if the price is right, but I don't want to, Drew Carey to come after me. But I'll probably go 40 wide and see if we can stay contained in there. And if we can collect a bunch of premium on it and then pull out like 15 to 25% profit, I'll probably do that on Domino's. So I want to see how we get through earnings season. I know it's just starting. Domino's, Delta Airlines, banks on Friday, because going into the election, if the market's going to underreact to earnings, I'd much rather be an earnings seller than an earnings buyer. Does that make sense? Like, I don't mind taking the trade where I can collect the premium, prices range bound,
So
and we
iron
can actually
condor
make money on that trade.
selling.
Yeah.
Basically, yeah. I know what you mean.
Yep. So that'll be what it look at. So let's price it out tomorrow. But for the sake of time, let's give Nick the floor. But thanks for jumping on here, dude. Let's do it again tomorrow.
Yep. That sounds
All right.
good.
Thanks,
All right.
Frank.
Thank you.
See you, everybody.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. Good morning, everybody. Welcome to the 11 o'clock segment of the A1 Trading Show. My name is Nick Phillips with Victory Capital. Today, I'm going to start by going over our RBNZ prep. So tonight we have the Reserve Bank of New Zealand releasing their interest rate decisions and their monetary policy statement. We don't have a conference with this meeting. It is purely the interest rate in their statement. And with that, let's jump into some prep. So as far as data, since the last time that the RBNZ met, we haven't had much. We've only gotten one GDP figure out of them, but we can still review their key data figures and get a general idea of what the data is saying about the New Zealand economy. So inflation right now is sitting at 3.3%. It has come down significantly, obviously, since 2022 and 2023. From the highs of 7.3, 7.2, they have made consistent progress in bringing inflation down. The unemployment rate has ticked up incredibly over that same time period. Not necessarily good. Not a good thing at all. Seeing it's almost like could be considered a swing of the pendulum a little bit too far to the opposite side of an overheating economy. Now it's overcooling, a seriously weak economy. GDP is in contraction at negative 0.5%. So overall, a pretty weak economy out of New Zealand. One of the issues with the New Zealand dollar or with the New Zealand economy as far as tracking their data goes, unlike most of the other central banks, the major central banks, that all the others release data on a monthly basis for the most part. Some of it's quarterly, but for the most part, it's monthly figures. So every month, 12 times a year, the market gets to get new information regarding the economy in Canada, the economy in the US, the economy in other places. New Zealand releases most of their data on a quarterly basis. So it's like 4 times a year we get real information out of New Zealand. It makes trading some of this stuff, at least the RBNZ meetings out of New Zealand, a little bit more nuanced, a little bit slightly more difficult, I guess I could say, because you get such infrequent data. Nonetheless, these are some of the comments that we got from the RBNZ since their last meeting in August. We could talk through some of these if you wanted to, Governor, or I want to see inflation I want to see inflation expectations and pricing intentions continue to remain anchored. Committee has achieved a very strong level of confidence that low and stable inflation is back within 1% and 3%. So this is key right here. I didn't highlight this, but low and stable inflation. So they need a little bit of inflation to keep the economy growing, but they want it low and they want it stable to where it's getting low and then just not falling off a cliff into deflation territory. So according to Governor Orr, the committee has achieved a very strong level of confidence that inflation is where they want it to be. Again, some nuance here being most central banks, they were kind of wrong on the inflation situation post-COVID. And so these are the same central bankers saying that they're confident about low and stable inflation now, given tighter monetary policy restrictions. It's just little things to keep in mind where, the data to me, if you look at just these three charts, the data to me shows a significantly weakening economy out of New Zealand. This same, how can I say this? This same trend continuing doesn't stabilize. Like it moves into deflationary territory, right? So the New Zealand economy is going to need some bit of bolstering if it is this week. It needs some kind of easing of monetary policy, which the markets are beginning to price in. We'll jump through some of these comments here. I want to touch on this one. Governor Orr, this was from Governor Orr. I don't know why it doesn't specify that. He said that they made a reasonable first step for monetary easing at their last decision. They are in a strong position to move calmly. Now, this statement right here, that they're in a strong position to move calmly, is kind of counter to what the markets are pricing in right now. The markets are pricing in 50 basis points of cuts for today and an additional 40 basis points of cuts come November. So right here, in order to trade the RBNZ information tonight, we need something to hit the market that is a bit of a surprise. In my opinion, a 25 basis point cut and not much of a language change out of their statement from last time to this time, that's going to be the best opportunity to trade this event. And that's because the markets are fully pricing in 50 basis points and an additional 40. They are also, I don't know if I wrote this down here, they're pricing in an additional 220 basis point cuts by the end of next year. So the markets are incredibly aggressively dovish towards New Zealand right now, which means this positioning on the New Zealand dollar, well, granted, we're elevated post-August, post-July and August. We've started to significantly get a drop here. It's not to say that it won't continue to drop. It's not to say that a 50 basis points and guidance being unchanged won't move the needle. Like it's not to say that that won't happen, but it's arguably already priced in. So if they cut heavy and their guidance moving forward is unchanged, this is everything the markets already know. This is what the markets are pricing in currently. So no tradable opportunity out of this. If we get a 50 basis point cut and their guidance suggests more cuts, because their last guidance was we can move calmly. We're cutting. We're not going to go too aggressive with cuts. Something that has happened since this last meeting, though, is the Fed went 50 basis point cuts. And the Fed, if you guys don't know, I'm sure most of you do, the Fed being the world reserve head, it's like the figurehead of the world economy. If they set a tone, it could give sort of like the cover for New Zealand to go 50 basis points now, right? So the markets are pricing in 50 basis points. The Feds have gone 50 basis points, which may be a big part of the reason why the markets are pricing in 50 basis points. Is they go, oh, the Feds have done it. New Zealand's economy is weakening significantly. There's no reason why they can't do it now too, even though 25 basis points is pretty standard, it's pretty typical. Absolutely no reason why the RB&Z couldn't do this exact same thing. And they probably should based on what we're seeing economically, right? That's what it's kind of the market idea. Some of the things I'm thinking as far as why would the markets be pricing in 50 basis points, another 40 in November, and over 200 moving into next year? Well, because of how significantly weak the economy is, plus the Fed's going 50. So if we get 50 basis points cuts and their guidance, the language in the statement insinuates more cuts are coming this year aggressively, that could present an opportunity to go short. I think that like there's a slight window there for the markets to go, okay, we should price in a little bit more aggressive cuts. We should price in a little bit more. This is not ideal for me. This isn't, I don't want to trade this scenario, although I do think that there's a slight opportunity there. Now, if we get a 25 basis point cut, the market immediately needs to recalibrate immediately because we're pricing in 50. So if we only get a 25 basis point cut, take guidance off the table, there is an opportunity, or there could be an opportunity. We want to make sure that price action is following this bias. There could be an opportunity to go long on the New Zealand dollar. Now, this is the best case scenario. I said it right here. I'm going to highlight this again and change the text color. If we get 25 basis point cuts and the guidance is unchanged, so they only cut by 25 basis points, and they say we can move forward calmly, we're not in a rush, we're going to be taking incremental steps, like we are in an easing cycle, but we are not being aggressive. If they come out dovish but not aggressively dovish, the markets are going to need to recalibrate, because the markets are currently positioned in a very aggressive, forward-looking situation. The markets are expecting 100 basis points of cuts by November. If they only get 25 today, that would mean they're overshooting by nearly 75 basis points for the November cut, which is, unless we get some significant weakness, like insanely weak data coming out of New Zealand between now and November, that's not going to happen, right? So they would need to immediately recalibrate. Pricing would need to immediately recalibrate, and we should see, theoretically, some pretty good upside out of New Zealand dollar. So this is my best trading opportunity for tonight. This is the way that I trade all of these red folder events. Is I create plans, and if my plan is not met, if this idea does not come to fruition, I'm not trading. So I'll say this is my A+ trade. This happens, and price action immediately begins to agree, I'm getting involved. If this happens and price action immediately agrees, I'm getting involved. If this happens and price action starts to agree, because it's a low liquidity session, I'm not getting involved. And then if this happens, I'm definitely not getting involved. So I have two positions, or two potential scenarios that are a no-go for me. If one of these two things happens, I'm not getting involved. And then I have two scenarios where if one of these two things happens, I'm getting involved. It's the way I approach all of these events, whether it's central bank meetings or simply economic data, like we have CPI coming up this week, US CPI, I prepare the exact same way. So do with this what you will. This whole document goes to my private group, so they got this morning, and they get to read through all of this stuff. The monetary policy outlook. I did a summary of the comments from the central bank since the last meeting, which we haven't had a ton. Honestly, the RBNZ is relatively quiet, kind of to be expected with their quarterly release of data. There's not much to say. We do have, I believe we have GDP. We have something coming up for New Zealand dollar soon. Give me 1 second. I believe it's next week. NZD CPI is next week. So we have interest rate decision today or tonight, and then next week we get CPI, which could drastically change the situation in one direction or the other. So we'll see. All right. That is all the RB&Z prep that I have for you. So we're going to move on to touching into some of these other scenarios or other things I'm watching. I always kind of, as a Forex turned futures trader and mostly currencies futures trader, the Doxy is sort of like my anchor point. And so I always come to the Doxy to kind of see what's going on, where we're at, which hasn't changed much. This is something that I said, I've kind of been saying this for the last month, over a month, is I expect a bit of consolidation out of the dollar at these levels. And my consolidation range is, arguably kind of wide, I guess you would say. But prior to the election, I don't expect, again, all of this stuff is a caveat of all of my outlooks are caveated by the unpredictability of the fundamentals. Something massive happens tomorrow. All of a sudden, Israel and Iran conflict jumps up like 25 notches and they're going crazy. There's no reason I don't think that the dollar couldn't break out of this sort of these levels that I've identified here, which I guess a third level would be really like here. So I kind of expect prior to the election, U.S. election, I expect price to hang out here. I don't see much directional information coming out of the U.S. until then. Even with CPI coming up this week, I believe Chris was touching on this. I don't know how reliable the CPI is going to be for the markets this week, given the drastic change in oil due to the war tensions. Not to say that it's not going to matter, not to say that the markets aren't going to recalibrate their doxy positions, their equity positions when we get CPI. I'm not saying that at all. I'm just saying I don't know how reliable the information is going to be, and I sort of have a underlying bias of we need to get past the election. We really need to get past the election in order for us to have any clear direction. Again, with the caveat that if something massive pops off between now and then with Israel and Iran, or even in the US, this election is very tumultuous for the general population. And if something insane happens, I could totally see dollar upside as safe haven flow into the dollar, regardless of economic data, regardless of potential monetary policy outlook, regardless of whether we're getting 25 basis points in cuts over the next year or 250 basis points in cuts over the next year, which is obviously neither one of those situations are exactly what's being projected. But it's just to sort of be a little dramatic. I think we are in a time where it's like right now we have, what's today? The 8th. We have less than a month until the election. That is not a lot of time. Where is it? Yeah. Presidential election, November 5th. So less than a month away from U.S. presidential election. I think we're going to see some movement in the markets. I'll take stocks, put stocks to the side. Doxy and currencies, I think we're going to be consolidating. I think the markets are going to go, you know what? We really don't know what to do with any information coming in because we need to see who's going to win this election and what that's going to mean for the economy. And then after that, I believe we have another FOMC meeting right after. I think maybe the next week, the week after the election. Are we going FOMC? It's the week after. Oh, nope. Okay, yeah. So the week after the election, we have FOMC. So that's sort of where I'm positioned when it comes to US data, when it comes to the dollar. I am sitting back, waiting patiently, not expecting too much drastic movement out of the Doxy until we get that behind us. All right, guys, we got about 10 minutes here left in my session, so I'm going to open it up for Q&A. If you guys want to ask me any questions, please feel free to. Somebody is saying gold. They want me to look at gold. So my outlook on gold on the downside, I haven't been. Let me check these news headlines and see. I don't see any real reason that a headline would push gold low like this. By the way, this is the PIQ suite. I have the paid version, but the free version is almost just as good. You just have a little bit more ads to deal with. Like maybe you would have an ad here and an ad here and an ad here. This is a great news resource, headline resource. If you want it, you can add all sorts of feeds. I'm not going to get into this tool too much. It's pretty cool. PIQsuite.com. Go check it out. As far as headlines go, I'm not seeing anything in the last hour that would have pushed gold like this. So for me, the way I'm looking at gold is the exact same way I'm looking at oil right now. We're having a bit of a pause in the war headlines. I believe a lot of this action, really, I guess all of this action from the beginning of the month, this upside in oil, I believe gold had a very similar situation. Maybe not. Gold wasn't reacting too much to the reaction as far as like a sustained upside. And I think it's because of where we're at with gold at these all-time highs. Regardless, this downside move out of gold and out of oil, I believe can be attributed to sort of like a pause in some of the tensions, the Iran and Israel tensions. It's like the markets are sitting around waiting for the next thing to happen and nothing's happening. So, okay, profit taking. Well, if you were getting involved in oil as things were spiking, and maybe you were getting involved in gold over here, some of this downside is bit of risk on, I would assume. We're seeing some push up in equities. Let's go check NASDAQ. Seeing a push up in NASDAQ. Let's check the currencies real quick and see if we're behaving in a risk on manner. Dollar's not necessarily behaving risk on. Currencies aren't necessarily behaving risk on right now. But equities and oil and gold are. So slightly mixed markets. Got a bit of downside here in the yen, upside in the dollar, downside sort of flat out of the Swiss franc, CAD downside, New Zealand downside flat, odd downside flat. So it's just sort of mixed markets on the currency side. But when you look at equities and oil and gold, we're seeing a risk on scenario. Money's dumping out of oil, pumping into equities, dumping out of gold, pumping into equities. So, would I be involved in oil downside? Personally, I don't want to sell oil. I would love for oil to come back into these areas. And this is one of the moral dilemmas of being a trader. And sometimes you find yourself going, I would love for price to discount massively and then sort of like a real world trigger to give me a reason to buy oil back up, you know. But if we get a reason for oil prices to spike, it probably means somebody somewhere is suffering, which again is the moral dilemma. So, you know, that whole conversation aside, that would be my ideal scenario. Looking at oil would be price coming back into these areas, and then something giving me a reason to get in and buy it back to the upside. Let's see. My analysis on US oil and USD CHF. So I just gave US oil. I want gold to go bullish ASAP. My account is going to go negative. Okay, so Oregon 245. Don't want to call you out, but if you're in a losing position and price is continuing to drop, like hoping and praying is not that's not a strategy, right? It's not a good approach to the market. If you're in a losing position, kind of some of the best practices are to cut your losers short. I would walk away, come back later, let the market do its thing, and wait for a better position. If you're in a losing position and your losing position is costing you a lot, I'd cut that immediately. Not again, none of this is financial advice, but that's just the way I approach my trades. Is if I'm in a losing position and it's gone beyond a level that I would like, let's say I was trying to buy down here at these lows. I mean, my stops are out here. At this point, it's definitely gone beyond where I would want to be involved in. And then, you know, the mental game of, oh, well, it's hitting this support right here, so maybe I'll just hold on. And then price breaks this. And then you go, oh, well, you know what? Maybe I'll just hold on to this support. Oh, and then price breaks that. It's just it's a vicious cycle. So the best practice, cut your losses short, cut them quick. I wouldn't trade till Thursday, in my opinion. Gold, they take your life savings, my friend. Beware. FOMC tomorrow. So coconuts, FOMC tomorrow. FOMC is just the meeting minutes. It's not to say that the markets aren't going to move from it, but there needs to be a clear distinction made between FOMC and FOMC meeting minutes. The FOMC meeting minutes are purely just the notes from the previous FOMC meeting. So most of what's I keep thinking the camera's over here. Most of what is going to come out of the FOMC meeting minutes is already priced into the market, but there could be some surprising little notes, some things that were said, you know, discussions that were had that maybe didn't make it to the forefront of the conversation, or any of the insights that were given from the previous FOMC meeting. Say, for instance, I don't know, 2 or 3 of the meeting members were big dissenters on the decision to go 50 basis points, and they actually thought we should hold again, right? That kind of information, if we didn't receive it before, could be directionally important for the markets. So just a clear distinction there. FOMC meeting minutes, not the same thing as the FOMC meeting itself. Fred O said, what's your TA strategy? Technical. I'm assuming you're asking technical analysis. Does it change in gold or oil or currencies? When I do technical analysis, it is very simple. It is support and resistance lines, major areas of consolidation, combined with fundamental triggers and an understanding of sort of the entire way I approach the markets. Is I kind of coined it FBTE, fundamental bias, technical entries. But my technical entries are really simple: support and resistance, price action patterns. That's it. So let's say right now, for instance, I wouldn't trade this way, but just as a technical analysis example, let's say that coming into here, we get a reason to sell the dollar. Okay. And then the dollar falls off, and maybe we get involved after it breaks below this support level. Okay. And then we take it to somewhere in this area of price action. Do you see how price came here and stalled? So price pushed up into this area and stalled for a good little bit here. This is 24 hours of price just stalling. So inside of this range is going to be a good area for me to target. Doxy falls, I target here. Okay. Well, then I'll wait, I'll get out. If the market gives me the next good opportunity, let's say price pulls back up into here. Well, now we have a shoulder, a head, and a shoulder forming, and we get some decent rejection out of this area. I will certainly continue to sell the dollar if I have not got any new reasons to buy the dollar. But I try to keep technical analysis super simple. It can get incredibly complex, and I have, over the years accumulated probably 20 to 30 different technical analysis strategies. But I really don't I don't trade any of them anymore. I haven't for a couple years. I purely trade red folder risk events at this point. There are from time to time I will take the odd technical only trade. It is very rare. I don't like doing it because I don't like adding in my journal uh, technical only trade. I hate doing it. When I take a loss or a win, it doesn't matter. Every time I have to journal technical analysis entry, I feel kind of like a bad trader, which is not fair. There's profitable strategies that are technicals only. I do think those exist. I think they're harder to trade and much more difficult, and everybody's trying to do it, and most everybody is failing. So I tend to not do it. But yeah, technical analysis, just keep it very simple. Support and resistance and price action patterns are really kind of all you need, in my opinion. All right, let's see. Okay, so USD CHF. Somebody wants me to go over USD CHF. So, because I trade futures, I'm going to go over CHF USD. So, everything I'm saying, just anticipate it being the opposite for USD CHF. Okay. Let's check this out. Bit of a difficult position for the Swiss franc, in my opinion, compared to the US dollar. But let's still take a look. For me, shorts are the only opportunity I'd be looking for out of this area. And it, again, out of a simplicity on technical analysis approach, where are we at? Where is price currently at? We are at highs. We at all-time highs? I don't know if we're at all-time highs. No, we're not at all-time highs, but we are at significant weekly highs here. I don't want to be buying into that. That's a big ceiling. It's like a real heavy, almost like a gatekeeper of price. I'm not trying to buy into to try to push through that. I have zero interest in doing that. So I would rather be looking for opportunities to sell. And the opportunities to sell the Swiss franc for me are going to come from changes in either Swiss economy or US economy. For Swiss economy, I'll be looking for weakness, dovish tones out of the central bank, reasons to short the Swiss. And then if I wanted to short the Swiss based on US economy, then I'd be looking for reasons to go long on the dollar, which would be things like, a major shift in monetary policy, something happening in the real world geopolitically that turns the markets risk off and we see safe haven flows. Now, let me backtrack on that whole statement, because the Swiss franc is also a safe haven currency. Historically, it has behaved as a safe haven currency. So if the Doxy is pushing up off of safe haven flows, I probably wouldn't be selling the Swiss. I would be selling something like the Australian dollar versus the New Zealand dollar. Swiss franc, the safe haven flow activity out of the Swiss franc is also going to be sort of difficult to navigate, because some of the geopolitics that could be affecting the world economy could be happening pretty close to Switzerland, relatively speaking, which kind of diffuses some of the safe haven flows going into the Swiss franc, or we've seen that happen historically. So, really bad news out of the Swiss National Bank would be the only reason I'd be looking to sell the Swiss franc, but that's the only direction I'd be interested in taking this currency. All right, I gotta try to hurry up and wrap up here. Cheese Addict said, I'm thinking about buying gold up from 2,600 to 2,630. Excuse me. So as far as like a buy-in target, and 2,600, I think is a fantastic opportunity, place to look to get long from. And where you're targeting 2,630 feels a little random, but I can see maybe some of this resistance turn support area here. I don't see this being out of the question at all. Now, everybody trades differently, and however you trade is completely up to you. Obviously, you're the only one pushing buy and sell on your terminal. This is what I would do. If that was the idea behind this trade, and let's say you have a fundamental reason for wanting to do this, I would drop down to some of these lower time frames, 3-minute, 5-minute, 15-minute maybe. And once you get down to 2,600, personally, I'm never just getting in at my target price simply because price hit my target price. I'm zero interested in doing that, especially if we're coming down this heavy and this fast and this hard. It's like trying to catch a falling knife. This knife could just fall completely through 2,600. Just because it was previous support doesn't mean that this previous support is going to hold. I mean, it could end up being 2,550 or down here in this level near 2,550 right here, and all of this price action. So certainly not a bad price to be looking to get involved in, but you want to make sure that you get a good price action pattern, or I would if I was getting involved here. So what could that look like? I mean, it could look like a morning star formation, something like this in this area. Cool. That'd be a good reason for me to get involved. Plus, if I had a fundamental trigger, that would help even more. A double bottom, a head and shoulders, whatever. There are a ton of price action patterns that you could go look up for reversals. And then also be okay with the fact that price could come in here, tap this area, and just skyrocket, and you might miss your trade entirely. Definitely have to be okay with that. If it doesn't give you a reason to get involved, in my opinion, you shouldn't get involved. There's a good price target. It's reasonable. I developed a thesis, an assumptive thesis based on your comment. But my assumptive thesis behind this trade would be gold is overall strong. This is an area of, previous support and consolidation. So price kind of hung out here for a minute. If we get the right price action opportunity in this area, sure. I think that's a very reasonable trade. Very reasonable idea. Fred O said just patterns to get your entries. So again, my entries specifically, I don't trade just technical analysis. So my entries, really 98% of my trades, like if I take 100 trades, 98 of them are based on economic data. So CPI hits and it surprises the markets, and we get a great example, NFP last week. We had 254,000 jobs added, which was a massive surprise to the markets and pushed the dollar up. That was a perfect trading opportunity, and we took advantage of it. So I need a good economic data trigger or a headline trigger. Something massive, war happens, and then I jump over to gold and I see gold is spiking to the upside, or I jump to oil and I see oil is spiking to the upside. I see the Australian dollar, New Zealand dollar dropping to the downside. I get involved immediately. And I prefer to see, like, if we get a trigger, let's just pretend that we get a trigger right now that happens. That's kind of odd. Little spike there. What time is it? 11:40. So new 5-minute candle, I guess. We get a trigger, and then price starts to react like it is right now. Do a little bit of a pullback. Maybe I get that morning star here on the 5-second. That gives me a reason to get in. Boom. So I've got my economic data reason to get in. I've got my real world trigger. The way I like to look at it is something massive happened in the real world, and whatever I'm looking to trade is priced incorrectly for this new information. This new information says actually gold is worth a lot more than what it's currently trading at, and we see price action agreeing. Look, this is actually kind of perfect. Minus a trigger. We don't have a trigger right now, I don't think, unless there's a headline that just happened that I missed. But let's pretend the trigger happened here where we mentioned it. Price comes over here, does this little bit of a pullback. What do we have here? Morning star formation. Boom, getting involved in this trade to the upside. Again, we don't have an economic data trigger, so just getting involved because we got a morning star isn't enough for me. But if we had an economic data trigger and this price action pattern happened, absolutely, I'm getting involved in that. That news website, Jamie O'Reilly, it is PIQ Suite. It's not, they don't have like all the data and everything. Actually, maybe you could add a data feed. I actually don't think so, though, now that I'm looking at it. From what I know, charts and data, I could be wrong. So you can get the economic calendar, the investing economic calendar, and then trading view. I think you can pull up basically any chart you want if you pull up the trading view thing. Let's see. This is what it looks like when you add a new app to the thing, and then you can shuffle this around and make it your own. You want to put it there, you want to put the chart over here, you want to move this headline, the Reuters terminal headlines, over here. You can do that. I'm messing up the way I have mine, the way I like mine, which is all headlines for this. I don't really need the data feed in there. I'll just watch it on the charts themselves. So piqsuite.com. Pretty cool. I don't have any affiliation with them or like any like links or anything to send you. Just go to piqsuite.com and check it out, make it your own. I really enjoy this platform. All right, guys. I think I am. Yeah, Forex Factory is good too. Absolutely. I like this for the headlines. Like Forex Factory, I like to use Forex Factory for like planning. And then Financial Juice as well for headlines. This is one of my favorite websites for headlines. One of the things I love about, or two of the things I should say that I love about Financial Juice is some of these little sentiment triggers that they'll push on their headlines, but also this stuff, these red highlighted headlines. This is really impactful information hitting the markets, and a lot of times is really useful for me. All right, guys, that is all I have for you. I have run over my time by about 15 minutes here. Again, my name is Nick Phillips. If you guys want to keep up with me on Instagram, you can follow me at official Nick Phillips, and then you can follow my news company headline brand Victory Capital on Instagram as well, at official Victory Capital. I try to keep up with some of the most important headlines and post them relatively quickly. So follow me there, and I will see you guys on the next one.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.